The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling a problem with us out here. We have the Dow Industrials down 209, Nasdaq off 69, S&P's off 25, gold contract up $7.50, trading at $15.16 an ounce. We got silver flat, $16.94 an ounce. Light sweet crude up 55 cents, $55.05 a barrel. Notes and bonds, they still want it. 10-year note up 11 ticks, 130.01. 30-year bond up a full point plus 3 ticks, 162.13. And King Dollar down 97 ticks, trading 97.225. The euro is at 112. The yen is at 105.37. And the pound is out here at 120 to 1 US dollar. You're working double time, man.
That's right, man. We got to hold down the fort for Mr. Larry Pesavento. He's a trooper, always filling in. Basil and I doing our part as well, man. Trying to jump in there for sure.
There's no doubt. Let's take a look at some of the higher volume equities. In this Roku, you talk about
Roku
up 34% in 4 days.
Not bad, right? Before they came out with their earnings, it was at about 100.
Look at
and
this.
It's easy to calculate percentages when you're at 100.
Exactly.
Right?
You had the low of that day, 98, the high 103, and you're at 134.
Yeah, and I believe I saw they got an analyst upgrade as well today. I forget who it was, but somebody going from 150 to 180, I believe.
Yeah.
Oh no, from 120 to 150. Excuse me.
Look at that.
I knew it was a $30 price rate. What's up with 150, man? Jack it up. Come on, we're almost at 150 already.
Well, and the thing that's amazing here is that, you know, yeah, their revenue's going up, but they're still in a losing position.
Yeah, I mean, if they start growing, I mean, look at that. They're growing by 100% from 2018 to 2020. I mean, remarkable.
That's intense.
When you think about who they're competing with, man, they are in a highly competitive arena. In terms of streaming. I mean, you're Amazon, one of their competitors, man, and you're growing at 100% from over 2 years, from 2018 to 2020. So maybe that, you know, the market sees that those negative numbers on the earnings front might be disappearing if they keep just doubling over every 2 years on their revenue.
Gold contract, folks, still wants higher price. And inside this gold market, if you're in this gold market, you know it. There are so many ABC up structures, confirmed one, folks. It's pretty amazing. We haven't seen this in years. You know, just even in general, meaning that when sectors really take off, you know, you can have a couple ABCs inside the sector, meaning the equities. And the gold, I mean, gold is such a small sector anyway, but, you know, you get 25, 30% of these equities already confirmed ABC structures up. It's powerful.
Yeah.
It's a powerful move.
It would make sense that that's happening, though, when we have gold at 15.15. We haven't seen that price tag in 6, 7 years, right? I mean, they better be doing well with that price tag.
XAU, HUI, they're all in confirmed ABC structures.
Rocket ship, man.
They blew out their B points last week, and they're big numbers, too, man.
Sure.
I mean, they're big numbers. Look at your first leg in the XAU, $66. That was May 30th. Runs up to 93. They consolidate for all of a week and a half, and we'll see what happens here. But you know, then you're another level. You know, so
yeah. For me, it's been just such a rocket ship that I struggle to find the B2C leg when you put these up on the charts. Just to be, for me, there's no B2C, man. It's been a rocket ship on every single one. The trend line is just, there's no trend line that breaks. I mean, we have 2 bars, but I don't see B2Cs when you literally have no trend downward. There's none. It doesn't take a technician
so if we're looking at the XAU, the consolidation side, so this is 100% movement sideways. That's the most powerful A to B, B to C that you can get.
What is that, 100% move sideways?
You don't move. You stay at the highs. So you get an ABC structure that, let's say the A to B is 10 points, right? Then you can pull back a 0.38250,618, right? All you pull back, you don't pull back at all. You consolidate sideways and you go again.
Sounds good.
And that's the most powerful one there is.
Sure. That almost be a 0% then, whereas 100%, right?
Yeah, right. Yeah. So that's what they're doing.
That's
what they look like they're doing. Let's put it that way.
That makes more sense to me, man, because I don't see a B2C on any of these charts.
No,
man.
that's how. And then when they do that,
it's still bullish, just for different reasons, man. There's the trend, you know, versus you're seeing ABCs. I'm just seeing positive trends, man, everywhere.
The 10-year. We go take a look at this 10-year now.
Time to refinance. Go for
I
it.
tell you, you know, you're up 12 ticks. This is laying at its highs.
Yeah.
You have 547,000 contracts today, so that's going to be good contract volume.
Sure.
You know, that's good numbers there.
And the 30 year's up more than a full point.
And the 30-year, too, and you saw this in the gold report this morning. The 30-year had already hit its ABC structure, folks, when it goosed last week all the way up to 163.
Yeah.
So it's going to be intriguing to see, okay, now what happens?
Sure.
You know?
Yeah.
Okay.
Can we pull up the 10-year yield if you could? Because always remarkable. Just start typing 10-year. Okay.
Yeah, do it this way because you got a smaller one. Yeah.
There we go. And then we just go GPO. Yeah, 1.67. We were at 1.69 when we were when I started playing. I just want to zoom in a bit. I mean, just going back till 9:15, man, you were up there at 1.693. Fast moves. We got a 1.67 handle. When are we going to get a 1.5 handle, man? I don't know. Maybe by what time's your show in the afternoon start? 3 o'clock?
Seriously,
maybe. Seriously.
1.31 wants to be tested, folks. The real question is going to be, you know, what happens when we get down there?
And, you know, we're right back to where we were. I was talking about, you know, with Basil and some of the updates in terms of it's almost like you erased last week completely, right? You had the SPY at about 292 to start last week, and then you had it almost finishing at 292. So, man, if we really see a pullback again, maybe you'd see those yields start to rise. And you have, you know, we talked about it. So you have Goldman Sachs revising their expected GDP to 1.8%, down from 2. So they shaved it basically 10%. You know, they shaved 0.2 off from a 2 number. And then you have Bank of America saying the chance of a recession in the next 12 months is now 33% from maybe 20%. That's a big increase, man. You say, we got a 20% chance. And then you say, you know what, we're going to add 13% on that. Well, geez, that's almost doubling it, right? I mean, you go from 20% to 33% chance of a recession, and then you tie in the Hong Kong protests, I'm sure you saw.
That's getting heavy,
man. I mean, I think that's a big reason why the market is doing what it's doing, because that ties into the trade concerns, because we're supposed to be negotiating trade concerns. God forbid for the people over there, if anything escalated, let alone how that would play out if there was ever an escalation to a trade deal. I mean, how do you make a trade deal with the government that would ever do anything? And they haven't quite yet. But, man, that rhetoric has really got ramped up, and there have been a few protesters hurt, and so it's just worrisome, as we all know, you know, when things escalate.
And what happens there, folks, this is where it gets interesting. Like, we happen to get to see all the protests, right? But the people in mainland China don't.
I'm sure. Yeah.
You know,
they don't have Google. They don't have,
If you get a VPN, what happens is that when you go over there, you can do a VPN. But the people that are actually in China won't do the VPNs because they know that everyone watches it. Like, when I was over there, you know, I was rolling, we do a VPN, so you get around it, right? Yeah. But that's a tourist. They let tourists get around it. They're not going to let their own people get around it.
No, right. I mean, China's well aware that VPNs exist.
Totally,
so
exactly.
I'm not sure what you were doing, but they still, you can't just go over to China and the citizens have a VPN and then you're on regular Google. I mean, that's
right.
That's
but you can get the information. That's
okay.
That's the difference.
I myself am confused right now with that difference as we're having this conversation. I'm just letting you know.
Okay, so what happens is that if you do not have a VPN, right?
Okay.
You will not get the pictures of Hong Kong and all of that. Okay.
So explain to me then why you're saying why doesn't the normal Chinese person just get a VPN then?
Because the government's always watching them because you're not supposed to have them.
Why don't you do it on? Okay. I'm okay.
Yeah.
Yeah, but a VPN is they don't even know who you are really. You're on another. That's where I lose you. So
because I think anyone who even gets VPNs knows that the Chinese government's watching them anyway. But
no, they are. That's what I'm trying to do.
The tourists do it, not the people that really live there.
No, it makes sense, right?
Yeah. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow down 171, NASDAQ off 54, S&P's down 17.5. Let's go over to the banks because this looks like Citigroup. Okay, so you're down $1.69. Let me do the XLF. These things came down hard last week. This might just be, well, the XLF's not as bad, but Citigroup's getting hit. Let's Bank of America. Okay, so it's going to be interesting. This could be a precursor that, you know, I mean, I think this S&P still wants to basically try to get a bounce going, but if these banks are going to go south, man, Berkshire, that would be a monster heads up. Berkshire's down 13. So Berkshire's one of the first ones to break the June swing lows. Now, it held on price. It got above it, but that thing came right down into that level. Yeah, so look at that volume, too. So it did 26.9 million going into 16, going into 18. That's saying that Berkshire still doesn't want to go to 186. So if we go back to the SPY again for a second, you're down at 11 million right now. The top, what the low of Thursday was 289.01, hit 289.09. This looks to me like we still can get up to this 295, which would be really deviant inside the marketplace.
Yeah, we get some crazy volatility, right? I mean, that SPY last week, man, it's just crazy.
Big time. Oh, and look at this. Can Trust here. This is one of the pot stocks that blew up this morning. Yeah, right there. Okay, so let's take a look at this. So this was in the news last week. Okay, so they operate medical, marijuana, cannabis, healthcare sectors, and their revenue. So watch this. The revenue is not bad. You know what I mean? They're expanding. But when you take a look at this chart, too, what you're going to see.
And I see this is all Canada.
Yeah, yeah. And you can see it's been one-way trip, you know, down from 1197. You get a low of 187. Now, what happened here is this, is that their This came out last week that what they were doing is that they were adding on to their manufacturing facility, and they didn't have permission to add on.
Especially in any highly regulated industry,
Right.
like healthcare, let alone cannabis, right? I
Right.
mean, you got to behave in the regulations, man. Yeah.
Yeah. So cannabis CanTrust Holdings plunged 31% Monday after the troubled Canadian pot company said a second facility breached a second one. Oh, they already see that. That was a different one last week. Okay. Health Canada, the government agency that oversees the cannabis industry, has informed CanTrust that its manufacturing facility in Vaughan, Ontario, broke several rules, the company in the statement. CanTrust has already been struggling with the fallout from breaches at its greenhouse. Yeah, okay, so.
Yeah, so it was growing cannabis in unlicensed rooms.
Yeah.
I'm sure a lot of these you see in the U.S., right? They might have issues where, you know, some of it, they want video cameras literally on all these things.
Right.
Very regulated. As it,
Right
you know,
from
that's
the
not a problem.
seed, right from the seed
exactly.
to the, yeah. So let's go thick. Because what is happening with a few of these, my take is that you get a monster consolidation. Like if Canopy Growth, I expect this thing is going to try to test this 26. We're getting closer. We're at 32. That's down from 52.
Yeah.
You know, they look like they're big consolidations. Cronus, C-R-O-N. Oh, look at this. Okay. It's getting closer. This is kind of a different chart. 1289. Oh, this one gets interesting. So yeah, this is down from $25. You're 1287. Okay, let's go about 850. Be interesting to see. And of course, what happens is that every quarter we get to get more information as to, you know, are they expanding as much as they want to?
Yeah.
So this is, in dried cannabis, let's see.
So that's just going to be the leaf itself, as in the marijuana that everyone's familiar with,
Yeah.
versus the edibles and so forth, the oils. So
Right.
they're just producing straight plants, it looks like, as of right now at least. But they're still only looking at $15 million next quarter in terms of
Right.
revenue. So pretty much nothing in the grand scheme of things.
No. And the big losses.
And what's their description? What's their market cap? Because, you know, when you look at, when I say nothing, yeah, you're taking in 15 million, you're worth 4.3 billion. So basically you're taking in nothing, because that valuation has nothing to do with what they took in and what they're about to take in over this quarter. You know, it's all
Right.
about in the future.
So we got to look at Tilray. I haven't looked at this for a while.
Yeah.
So Tilray, lows 24 for the year. The high's 300.
Pretty similar, above a $4 billion valuation.
Oh, let's do this one.
It's poor unfortunate souls that bought it anywhere
Oh.
from 100, etc.
Just imagine this. Evidently, someone bought it at 300, right on the nose.
Right?
That's crazy. And this.
Somebody should frame that print
Oh
if they
my
got it. man.
God.
Frame it
Seriously.
for so you remember it and don't make that mistake again.
Now, what will be interesting here, they're looking at they're going to have an expansion of almost 100% in revenue this quarter.
Yeah, percentages.
And they're coming out the 13th. Oh, I like it. That's
Yeah.
tomorrow.
I just percentages on such low numbers. They're still only going to be taking 40 million, and they're worth 4 billion. You know, and then
Oh, yeah.
they
Listen,
better start doing
Yeah.
something, man. Man, oh man.
the valuations, you
Yeah.
know, are pretty intense. There's
They
no
sure
doubt. And you know, as we're talking there, you get the S&P's got a little pop here. So we hit a low out here today of 28.93. Yeah. We'll see. You know, you make this over the 29.07. There's no reason you can't get moving topside. Oh, Transocean, Drig. This is, I suspect this is going to be the next oil company, folks, that is going to go BK. This is so intense, man, watching some of these companies, man. These are monster companies that have been around forever. You know? Look
Yeah.
at this. I mean, this
Now
is...
this is deep ocean drilling
It is.
versus like
Yeah,
an oil
it is.
exploration or
Right,
something.
right,
Because
right.
oil's doing all right, 55
Oh,
bucks.
no, totally.
But when you talk about
Yeah.
trying to pull it out of the deep
Right.
crust of the earth in the Atlantic, or you know,
Right.
into the
Well-
Antarctic, or you know, that deep water drilling, etc.
That's right, because the oil companies don't have to go there because of the fracking. They don't have to take the big risk.
Sure.
So Transocean, they lease rigs.
Right.
That's their bit. So
And it's just not worth it at $55.
There's
you
no.
can
Yeah.
pay to drill
Yeah.
that deep if you get to sell a barrel of oil at $100.
Yeah.
But you can get anybody to drill when you only get to sell it at 55, and it's costing you 65 to get it out of the ground, right, or whatever it is.
And you can see there's nothing below this.
Yeah.
I think there is. Let me see. Hold on. Go back 50 years.
Nope.
Nope. Nothing.
Yeah.
Nothing.
Yeah.
And what you already had, you had McDermott already went, and so didn't. McDermott's not even in here anymore. You had two other companies that were really huge companies that already went bankrupt.
Maybe that's Sanopic. No, that was a tiny one. Yeah.
877-927-6648. We have the Dow Industrials down 120, NASDAQ 40, S&P's down 13. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Argentina. Argentina's going to be in the news again. This is pretty intense, folks. So you had an election in Argentina, a preliminary before the finals, I think in October.
Okay.
But you can see, if you're watching the screen here, I got the peso up, and what happened...
The Argentine peso,
yeah.
Just say, yeah.
And so what happened here is that we were at 45 pesos to $1 US yesterday, and guess what? It hit 61 today. So this is going to be, let's see, investors are pricing a 70% chance that Argentina is going to default the next 5 years. Man, Argentina is like...
Can I just scroll down a bit? Because it's a primary. Okay, I was hoping that would expand. So it was a primary, just like we have primaries here, and that's where we'll have to get the story, because I was hearing about it this morning, and I didn't get the full story on who it was or what they stand for, but...
Well, it's the Kirchner, which was the woman, her husband used to run Argentina, then she got the job, then they got rid of her, and so she I don't know if she can be president again, but she's going to be the vice president on this other ticket, and they're the ones that overwhelmed the president right now. But the bottom line is that the market's looking at it.
I see Macri and Fernandez, the two names up there. I'm not sure.
So the market is looking at it that, guess what? Inflation could rear its head again. I mean, pretty intense, man.
Yeah.
That's and there is a, let's see, so there's an ETF, an Argentina ETF.
Yeah.
So the peso goes down.
Yeah, so it's a weakened peso.
Yeah.
Yeah.
Right.
Yeah.
Right. Pretty intense.
Oh.
Let me bring this
Especially if you're
back.
living over there, man.
Yeah.
Your wealth just...
Oh, look at this.
Yeah.
Yeah, see, what you have here, inflation's raging again, evidently, because you bring this back to 2013, and you were at 5.7 pesos to $1 US.
Crazy.
Isn't that crazy?
Yeah.
I mean, it's, you know,
Staggering.
that's how, it's hard to even to comprehend of how you deal with that. You know.
Yes.
You had Weatherford too. That's right. Weatherford was the other one that went bankrupt. When we go back to the oil business, you had McDermott and Weatherford. Let's see if we pull up McDermott first. You'll see this is and the amount of, you know, like now look at that. Market cap's only 714 million.
Yeah.
And watch this though. Watch the revenue.
Yeah.
That's sad. And then
Crazy.
Weatherford. Oh yeah, so this one already has they're along further in the bankruptcy because they have a fifth letter. See the fifth letter there?
Yes, yeah.
And this one here, it's hard to comprehend. $49 down in 2008. And this one here, look at that.
Yeah.
5.7 billion.
Doesn't matter, right, when you look on the right side of that chart, to be losing money across the board.
Right, and the debt must be exponential.
Insane, I'm sure.
Right.
In the billions, yeah.
Yeah, big time.
Yeah.
GE, let's go to GE. You talk about non-transparency. This thing, now you're at 908.
It's been a tough start to August, let alone where it's been since 2017.
So, we were talking about the gold a little bit earlier, how the gold weren't leaving the highs, okay, of the trend. Look at GE. Now, this is on a monthly. You know, you went from $31 in 2016, you hit a low of $6.40 December of 2018, and then we've been going sideways at really lows for 6 months. That's dangerous. That's saying that, guess what? The low is open to basically get tested. You certainly don't have buyers in that equity. Revenue-wise, they still got 287,000 employees. Look at that.
Big numbers, man.
Look at this number. This is intriguing. So I guess they sold another part of them off, but
I'm sure,
117 billion to 101 billion next year.
Yeah. Earnings, though, going up. So, right, taking in 100 versus 117, but actually making more money. So, yeah, probably selling off maybe part of that, as I'm sure they need to, man. 280,000 workers.
And the real question is going to be how many more legacy issues and then how many more write-offs are they going to have? That, oh, sorry, that's right.
Yeah.
You know, we didn't make that kind of money then. This our brand name is not worth whatever we have associated with that name right now. Royal Gold, Franco-Nevada, they continue higher. It's pretty amazing, actually. You get Royals up 130 right now. You get Franco-Nevada. This finally got away from the top of its range. Yeah, 80, I think it was 86. We're at 95. Yeah, so you can see there's juice underneath these. And there was a couple. You know, we'll start seeing these articles come out. Let me see, GCZ9, because what we did have is, yeah, here it is. So
Slide this over so
Yeah.
you can see it.
this is so let's see. Prices are already the highest in 6 years. Goldman Sachs and Citigroup predict bullion could climb about 6% to 1,600 an ounce as little as 6 months. Money managers are going all in, raising their wages on a rally to the highest since 2016. What happens, folks, the gold market is so small, it doesn't take a lot.
Yeah.
Let's see, so you got, well, this guy's the president of Sprout. He's saying we're going from trade wars to currency wars. There's no doubt about that.
Yeah, and I think that chart, if you scroll down, is going to give you a quick one. So that's hedge funds boosting bets to the most in 3 years as market risk helps haven assets. So that's going to be your goal. Okay.
And there it is right there. There's, right? And the weekend in August
Sorry,
6th.
I was just pointing to what that chart said, that it's managed money net positions. So that's the important part there. That's tying back all the way to 2016. So for the first time, you're above, you know, where we were for, and that's a net position in a hedge fund.
Right.
Strong positions.
Which is pretty cool.
Yeah.
Because 2016 is where I'm figuring, yeah, a few of these equities I've already taken that out, but that's where I think the whole thing's going, meaning the rest of them.
Yeah. So the holding, which measures the difference between bets on a price increase and wagers on decline, was the highest since July 16th. July 16, excuse me.
Yeah.
Yeah.
And let's go into the GLD just for a second. So we'll take a look at the ownership summary. I'm just curious whether someone, okay, what month are we in? We're in
August.
August. Yeah, there's no big new ones here.
No.
Because these are all positions. Because what would happen, folks, is we'd need something sticking out on the far right-hand side on the date that would be saying either July or August that more people were buying.
Sure.
And at this particular point, you don't have that.
Yeah.
What did happen out here this morning is that you have Mark Bristow.
Yeah, I saw him on Bloomberg, right?
Oh, did you?
See him? Yeah,
oh,
he was
cool.
up there.
I read the article that, you know, and this is going to be good for Canadian miners. You know, so we are firmly a Canadian business. Bristow said Monday on an interview on Bloomberg, the miner is underinvested in Canada, and he's looking for a tier one asset in Canada that's capable of producing 500,000 ounces of gold.
Yeah, and does not intend to list in London this year. Committed to Canada.
Right,
Yeah.
right. You know, so that's going to be, I'm sure there's analysts doing work right now. What miners up there
Who's he going to buy?
have 500,000?
Totally.
Exactly. Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 180. NASDAQ is down 53. S&Ps are down 19. Let's go inside the Dow and see where the strength and weakness lies here. So you got Goldman putting 28 negative points, Boeing 21, Home Depot 13, Big Mac 11. Only 4 of them putting small numbers in, positive numbers.
Yeah.
You get 3M with 3, Johnson & Johnson 2, Apple 2. You talk about, here's a little rocket ship. Amgen evidently had a case go their way.
And something go their way, man. Start Friday, right?
Yeah, and 2 days, 182 to 205.
Yeah. Can we go into the news after you go to the chart? I just am curious. But,
you got, so it's something about one of their drugs, right? Amgen shares continue to climb, rising as much as 5%, the highest level since December. Well, as someone
so there you go. It was a court decision on patents.
Yeah.
So an aftermath of Friday's positive.
Yeah.
Enbrel patents. Yeah.
Yeah, we hear those ads.
So I'm not that familiar.
Yeah.
So the wind clears the way for the pipeline coming as the key overhang is removed. So much better position now with the worst case fear of Wall Street gone in terms of that patent case.
And look at this. When you pull this up, this is pretty
intense. The analyst
intense.
had 13 buys, 14 holds, 0 sells. So.
Put this back.
What's that high?
Yeah, let me have it
Sure.
this way. Look at that. 210.19.
Yeah, we were within $3 of that level.
Yeah.
We were as high as 207.35.
And you got a real expansion. I mean, look at that thing. That's a number.
Definitely.
That is definitely a number.
How about oil? Can we check it out?
Yeah.
Oil, we're sitting there right now, 54.61, I believe. We're above 55. We're as low as like 53.60, I think, this morning. So you've seen that contract jump around as well.
Okay, so let's take a look. So you got down to the lows again. Oh, see, this is going to be interesting, man, because that had volume at those lows. So we got all the way into, what, $50.52 last week.
Yep.
Now you're climbing back up into the downdraft again. You're going to be, this is, you know, it looks like it wants to try to make it through this downdraft, but it's having a hard time every time it gets up there.
Yeah, and just like, we saw that falling apart in terms of, with the market, in terms of oil falling apart to the 50-50. As the market kind of rebounded, you saw oil rebound as well.
Yeah, it's moving with the market. There's no doubt.
A little bit different today. That's what's interesting, right?
Yeah. If we take,
Yeah, that's what even when I pulled it up this morning, man, I was like, whoa, what is going on here, man? You go from almost where we're at right now, as in 54.30, down to a low of 53.76. You go $1.50 to the upside. No, even more than that. Yeah,
that's amazing.
55.18, and then boom, we're down 70 cents right away. I mean, just fast markets, man.
So let's go to the XLE inside those oil and gas. Oh, this is trouble. Look at this. Wow. Okay, this is pretty cool. I didn't see this. So the XLE broke its swing point. This looks like an ABC down. Let me put this on a weekly. That's probably, okay, let's do this way. This would be pretty intense. I want to see if this is, what kind of retracement this was first. Look at that, it can be an ABC down. It did just, okay, so when we go from April of 2019, you're at $68. We get down to 58, so it's $10, and then you do a 0.618 retracement. So that's saying $54. Oh yeah, but we already hit it. No, he hit 57. So this is an ABC down at $54. You broke it on the daily, you broke it on the weekly. Here's 107 million. If I didn't take the biggest bar, 96 million and 66. So that's 53 right there.
Yeah.
And 53, folks. Oh, see, this is okay. So this is pretty cool. 53, folks, it's 53.36 is the lows of December 2018. Now, the reason that that's important is that that's real possible that where that S&P wants to go. And if the oil's leading us, that's something you want to keep your eye on.
Yeah.
Because your probability will go higher that...
Sure. I mean, oil's reacting to economy woes across the globe. Right?
Oh, yeah.
You have slowdowns, you're going to be using less energy,
Yep.
and you're going to be using less oil, and the price is going to decline when there's less demand. And so that's why it was really falling apart in December. And so, yeah, if you see it falling apart, and meanwhile, we have the markets just rebounding immensely last week, but we'll see.
And gasoline, unleaded is 166. 161 got to last week. So if we do XB1, and we put that on 166.25. Interesting. So we'll see. The longer we got under it last week, 166.25. But the longer you stay under that, we're at the 166.34. That brings the probability that you can actually go to the lows, which would be 124. So driving season is really over. Another couple weeks, right?
Yeah.
I mean,
coming into Labor Day.
Yeah.
Yeah.
So we'll see where that baby goes. That's a big number. Oh, the yen. So if you happen to be in the gold market, folks, you watch this yen. This yen is looking to trade down to like 99, and this is quite a move, man. And the Bank of Japan will not let this thing get down there quick because it took a while for us to get down to this 104.87. Now, this 104.87, which is in January, that was like a flash crash.
Yeah, I remember. It was quick.
Yeah, but now this is Bill cause to get down there,
Can we put it on a daily whenever
Yeah.
you're done with this? Because I mean, that's a weekly, but it was, I think, one day was
It was.
that.
It was.
Yeah, so there you go. I mean, that's all one day.
One day.
Where even though it, looks like a week, but it was
which is
one
unheard of.
Yeah.
108 to 104.
Yeah, and then back to close at 107.68.
Right.
As in, just forget about that.
Right.
Just like last week in the SPYs. Forget about that. 292 to 170 to 277, back to 292.
Right, and then if you line this up, what you're going to see when I line this up, you're going to see that, you break your 104. 104.56. You break that, and then guess what? Game is at 99. And that's lining up with how the bond market is trading, our U.S. bond market. That's lining up how gold is trading. Because the stronger that the yen gets, the stronger gold gets. But for some reason, they're both safe havens. That's their claims. You know what I mean? But people go into. I can't figure out why they buy the yen when Japan's been at negative rates forever. But that's what happens. And once they do that, gold keeps moving higher. So there's so many moving pieces, folks, behind this negative interest rates, and we'll see where the whole thing shakes out. But this is I was reading last night. So there's so many currency swaps in the world that this is more complicated than like a 2-minute conversation. But the bottom line is that the article on Bloomberg is saying there's currency swaps that banks do these like for 3 or 4 years. I'm one bank, you're another bank.
Okay.
And what ends up happening is they might look at the beginning that you'll do all right. Then at the end, what's happening is currency's moved around so much that you're still losing money.
Okay.
Stay right there. Tommy and I come
I'm
right
certain
back.
you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 196, NASDAQ off 50, S&P's off 19. Let's just go inside the NDX and see the strength versus the weakness inside there. So you got Amgen up 4.4%, Liberty is up 4.3%, INCY 2, Mercado Libre, oh, that's taking a hit. Oh, that makes sense. That's going to be South America. Interesting. So Mercado Libre's down 10%. Look at this. I wonder if that's from... doesn't even look that bad, huh?
Yeah, right?
Yeah. So let's see, Latin America. What's hitting that? Yeah, they're saying that Argentina, the election surprise.
They're a huge Latin American company.
Yeah.
That may hit them.
10%, man. That is a number. You got Monster Beverage off 3%, 3.2. Kraft Heinz down 2.75. Let's see, is that thing breaking lows? Yep, it is.
The woes continue.
I'm telling you, man. That stock is some of the well, I guess these big stocks are taking plenty of money, but it's their debt structure on the other side, right? That's what it seems like.
Yeah,
you know?
and there's still, I mean, $20, $30 billion companies. Something we pulled it up. So that's an issue where they still might be okay at a $30 billion company,
yeah.
but they used to be a $100 billion company or whatever. So they're not that anymore, or whatever it is, right? Yeah.
Small caps. Let's go take a look at the small caps out here. The IWM. Okay, that hasn't done much. Yeah, what it is doing though, see, the IWM today is coming into the downdraft of last week with tremendously lighter volume. So I suspect this baby still wants to bounce a little. Stay right there, folks. We get Fast Market coming up next, and we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Wow, go get him, folks.